You know, I used to update the best fixed deposit rates every month or every quarter, but not anymore. If you look at the latest Singapore fixed deposit rates for February 2026, they hover around the 1.5% per annum range, which seems like a safe haven. But in professional finance, I'm very sure you know this fact that we don't just look at interest rates, but we also look at opportunity costs. Now, just some government statistics as of the recording date, the 6-month T-bill had a recent cut-off yield of 1.37% per annum. And last year, Singapore inflation was hovering between 1 to 2%. So if your fixed deposit is around 1.5%, actually your real return is almost zero because your buying power actually decreased with the inflation. And more importantly, you're paying a liquidity tax. What do I mean is that in a 2026 volatile market, being unable to access your capital in 6 months is an unfair trade because the returns do not compensate the risk. Today, I want to break down why I prioritize liquidity over all these lock-ins, and also when a fixed deposit is actually the right tool to use for your personal finance. Hi, if you're new here, my name is Chris and I run a Telegram group of over 22,000 members interested in personal finance, so join us in the Honey Money SG Telegram group for free. I want to be a bit balanced first. Let's talk about the hidden value of fixed deposits, which actually helps you in property loan because it is a functional role for new aspiring homeowners. And I'm sure if you're going for a private property and you are trying to qualify for a bank loan, you will hear of this term called pledging. Especially when your earned income or your salary is not enough to qualify for a higher quantum loan, this is where you can do something known as pledging, which means you're trying to pledge a fixed deposit with the bank to increase your housing loan quantum. And this could be the difference between getting a 1M loan or getting rejected by the bank. In any case, you shouldn't really care about the FD interest rate. I think it's more important that you get the apartment or the condo that you want, the property that you want through this pledging of fixed deposit. That is the priority, not really the interest rate. Because you have done your comparison and you feel that the benefit of owning the property with a higher quantum loan outweighs the cost of having a low interest rates in your fixed deposit that is pledged. So I think this strategy makes total sense. Because of your income not able to hit the higher requirements, you need to pledge a fixed deposit. And in this case, you need to sacrifice a bit of your returns. But in return, you get that mortgage loan or home loan that you can qualify for a higher quantum. So I think that's a fair trade. But other than that, I don't really see a use of FD unless you want to qualify for higher AUM, assets under management, for priority or priority private banking. And I'm going to cover some of these reasons why I don't prefer fixed deposit. And I want to be very clear, it's for myself. It may be suitable for you, but this advice is for myself. So number one con is low interest rates. And we are looking at interest rates around the 1.5% per annum range as of February 2026. If you look at the government statistics, although the core inflation was less than 1% last year in 2025, but the long-term average inflation rate ranged around 2 to 3% per year for Singapore. So if you're getting a return of less than 2 to 3%, you are actually losing money because your purchasing power of your cash or your investments being less than 2 to 3% is losing value. And if you think about it from an opportunity cost perspective, even I put money in the CPF OA 2.5% is also higher than the current fixed deposits. But the caveat here is that I ignore the liquidity issue of CPF lah, but I know it's not a fair comparison. Now, if I were to take a higher effort, right, I go and manage high interest savings accounts, I go and qualify for their requirements, and my first 100K or 150K could qualify for higher interest rates of around 2 to 3% per annum. That's significantly better than fixed deposits, right? And not forgetting, high interest savings accounts, they are very liquid. You can take out the money anytime. It's just that you probably won't qualify for the requirements. But if you really need the money, your bank accounts, high interest savings accounts are the best assets that you can place your cash in. For example, the OCBC 360 account or the Standard Chartered Bonus Saver account. Both of these high interest savings accounts are still valid, right? And still giving better returns for very minimal requirements compared to an FD, right? FD is more like you place it and you forget about it until your tenor ends. So the fixed deposit tenor can be from 6 months to 1 year. Some of it is short term like 3 months. But if the goal is really to beat the fixed deposit rate without the lock-in period for liquidity, you have to look at tactical cash management. And one alternative solution is the uSMART 8.88% per annum money market fund promotion. Because from now till 31st of March 2026, you can earn an effective 8.88% per annum interest for 30 days on the Maybank money market fund. If you are a new to uSMART customer or you're an existing uSMART customer but you have not funded any deposit since the account opening, let's talk about the math. 8.88% per annum is significantly higher than what the fixed deposit rate is already giving you. Then for the strategy, you can park up to 8,000 Singapore dollars here, and uSMART will provide a platform subsidy to guarantee that return. And the advantage of money market fund is that it is highly liquid compared to a fixed deposit that has a fixed tenor. So you can take out the money anytime if you really don't want to participate anymore. And now that we are in a very volatile stock market, you can get a boosted yield on your idle cash while ready to deploy your cash when the market dip happens. So for those of you who are new to uSMART, you can use my exclusive link down below to sign up and get up to 200 US dollars of welcome rewards when you fulfill the requirements. Don't miss this offer and start boosting your passive income with uSMART. And thank you to uSMART for sponsoring this video. Back to the next con, and that is opportunity cost. Now, I know that for some investors, you're like the peace of mind, right? You'll want something guaranteed, capital guaranteed that will not lose money. So you'll also prefer like banks because they have this $100,000 of SDIC insurance that will not lose money. But do you know what you will lose? The purchasing power, because it is guaranteed to lose to inflation year over year, considering the average inflation to be around 2 to 3% per year. And when I say that fixed deposit is locked up for liquidity, I don't really mean that they are 100% locked up. Is that you can withdraw, but then you will just forego any interest rewards or income by the end of the period. Because you already hold for some months, right? By right, you should expect some interest back. But in reality, you will just get nothing. So if you think about it, is the opportunity cost really worth it for the liquidity that you are sacrificing if you are really unsure of whether you really need the cash? So think about it lah. We move on to our next con, which is that for fixed deposits, high capital is usually needed for better rates. If you look at all these fixed deposit promotions, they usually need to be fresh funds, means they cannot be existing funds within the bank. And you can see the minimum deposit starts from 5 figures, $10,000. So if you are placing a very small amount and with that small rate of return coming from fixed deposit, nothing is going to move the needle. You really need like a large amount of capital to really see the needle move and to make sure that the interest income is also substantial to make the effort worth it. So I would really say that for my age and profile, fixed deposit is not suitable for me. But that doesn't mean it is not suitable for you, because I strongly believe that there are people who really need fixed deposits. For example, if you have already retired from your job, right, you just want to focus on capital preservation, you already have a large capital, a large AUM, a small interest rate on a large capital is still going to generate you a lot of passive income returns through the form of interest income. And you can sleep peacefully without the market volatility of stock markets or equities market or any other precious metal or crypto market, because you're already at an age where you want peace. You don't want to see market volatility. Then I'll say fixed deposit is one asset that you can look at. But if you're a young folk and you're still taking in income from your employment or your business or your self-employed hustle, I really think it doesn't make sense, because cash is still going to come in every month or a certain period. So you are not in need of that passive income since you have monthly cash inflows. Unless you really want to do it for pledging for a higher quantum mortgage loan, then I would say the FD is worth it. And I'm going to introduce a 3-tier cash management system that I firstly adopt in terms of liquidity wise, so that for those of you who are considering, you can see whether this system will fit your life. And number one, the tier 1 is the highest liquidity. This is where I park my cash in all the very liquid bank accounts with high interest saving requirements. For example, like HSBC Everyday Global Account, Standard Chartered Bonus Saver Account, or OCBC 360 account. All these will yield around 2.5 to 3% returns, depending on whether you fulfill the terms and conditions. So tier 1 is like instant liquidity. You can take it out anytime. And then for tier 2 is like short-term liquidity. You can liquidate within 1 to 2 working days. And these are in assets like money market funds, right? So before you invest in the market, you put your cash into such money market funds, like the Maybank money market fund by uSMART, offering you 8.8% per annum, right? You just earn some idle returns before you deploy cash and enter the stock market. This is where you want to place your cash in. And finally, tier 3 is the safe haven, where you really want to capital guarantee some assets for your slightly long-term goals, like you want to buy a house within the next 2 to 3 years. You look at T-bills or fixed deposit that have slightly longer term and is still guaranteed by the government. Or you can also consider CPF, because you can use a CPF to pay for property, correct? So this is my 3-tier cash management system according to liquidity. Number 1, high interest savings account. Number 2, money market funds. And number 3, capital guaranteed government assets that can help you with long-term needs. So my overall takeaway for this video comes down to these points. Like number 1, If your cash is still sitting in the normal bank account earning 0.05%, it is very sad, right? You are losing to inflation guaranteed. But if your cash is in fixed deposits like 1.5% per annum, you're also not beating inflation and you're not considered a real investor. At least get a brokerage account like a uSMART. You don't have to invest straight away, but you need to have an account ready. And before your funds are ready to deploy to stock market, you can park it in the Maybank Money Market Fund for 8.88% per annum if you are new to uSMART. And anyway, I put all the links that I shared in the description as well as the pinned comment so you can check it out if you want to support the channel. Most importantly, stay liquid, stay rational. Don't just look at peace of mind, safe haven assets, and then jeopardize your entire long-term retirement planning. Unless you're already a retiree, then congrats to you, right? And if you want to look at what is my 2026 investment strategy, then you can refer to my previous video right here.